Good day, fellow investors. A great comment here by Newton asking what makes you think that the everything bubble will pop? And that's exactly what I want to discuss here. Will the everything bubble pop? What are the conditions and what kind of repercussions might that have for your money and your life and investing? The first thing we need to discuss is that we are in an everything bubble, and I think there is not much disagreement there. If we look at the total debt as percent of GDP in the US went from 30% to the current 120%. Government debt exploded, and the key is that now with interest rates, interest payments went to $1 trillion per year compared to just less than half a trillion per year a few years ago. And as interest payments go up and up, this will be 1 trillion 2024, the government needs to borrow more and more, and that borrowing is financed by the Fed's balance sheet that exploded. Government spending even increases more whatever is going on. Consequently, home prices have almost doubled compared to the great financial crisis that was a real estate bubble, and now prices are much higher. So that is clearly a bubble. Financial assets have exploded, and the S&P 500 gave you, with dividends, 15% per year for the last 15 years. That is insane. It went from a low of 666 points in February of 2009 to the current all-time highs at 5,000 points. Valuations have exploded. The Shiller P ratio is at 33, has been that high only in the dot-com bubble, and historically the range was around 15. So we are definitely in a bubble. There is so much money floating around, and the next question is, will the bubble pop and when? And the key is that we have been asking ourselves that for the last 10 years for sure, but this run has started in the early 1980s, more than 40 years ago, since the Fed started lowering interest rates, and that lasted 40 years. And only now have interest rates started to go up, with the expectations that the Fed will lower rates because it has to lower rates. And even Powell says that the current fiscal policy is unsustainable in the long term and something has to be done about it. So, unsustainable fiscal policy, this cannot continue forever, but the question is when? And will it pop? Of course, it's getting worse, interest payments are going higher and higher, but when will it pop? The key is that nobody knows. For now, modern monetary theory is dominating the fiscal environment, money printing, markets, everything, and Newton might have been right in the comment that might not end that soon, it might just continue because, as MMT says, government debt isn't a precursor of collapse that we have been led to believe it is, and countries like the US can sustain much greater deficits, more spending, higher asset prices without cause for concern, and actually a small deficit or surplus can lead to a recession, so you don't want to ever see a recession. And this MMT situation for now works, and nobody is smart enough to know whether it will pop tomorrow or in 15 years or maybe never. You never know. This time might be different. And now the question is, how about our investing? The key when it comes to investing, in my opinion, is, am I okay whatever happens? We have not seen a recession for more than 15 years, 2008, 2009, when 8.6 million people lost their jobs. So it's very hard to think about bad times now, where for 15 years, even in the COVID pandemic when you were getting money sitting on your couch, that's different. So 15 years, no terrible economic situations, and that is really possible that it just continues. The S&P 500 keeps doing 10% per year, but maybe something will happen again. not tomorrow, but in 2032. So again, you have 7 years of assets overflowing, making money, having the great life, and doing something now to not be invested there would feel stupid for 8 years. And then something bad can happen earlier, but I cannot predict it. Nobody knows, and everything looks great now. The key investing question here is, can I be okay whatever happens? Okay, I want to invest in a way that I don't want to be invested in the bad, expensive, but I want to do my 10% per year, even if something happens, by owning things that protect me also on the downside. I am okay if something happens in 2023, and I am okay if something bad happens earlier. As would Warren Buffett said, a rising tide lifts all boats. We have had that for 40 years now, but it's not until the tide goes out that you realize who is swimming naked. And that's the key here. Ask yourself one question, and all the videos that we make about this is, are you swimming naked or not? That's it. If the crisis hits you tomorrow, job, mortgage, portfolio, in financial targets, retirement targets, are you crushed by the crisis or not? If the answer is yes, you are swimming naked. If you say, I'm okay, you're not swimming naked and you're doing things perfectly. And then when it comes to investing in this environment, there will always be things that perform better than I do. The Magnificent Seven did 62% last year. I didn't do 62% last year. Bitcoin went up, 3 times. I didn't do 3x last year. ARK Innovation in 2020 did, again, 200%. I didn't do 200% in 2020. Investing is not about chasing great returns, but it's about investing in a way that you are safe no matter what happens. And perhaps the best example I could find is a potato field, because that field, no matter what happens with the economy, recession, whatever, will likely produce its average potato production over the next decade, and you can count on that a little bit less with droughts or whatever. But if your investments, money, are similar to a potato field, then you are not swimming naked, because you will get your potato value whatever happens over time. So ask yourself, am I getting my potatoes no matter what happens with global finances and economy? If yes, then everything is great. If not, you have to start thinking, and it doesn't have to be immediately urgent. You can slowly develop your portfolio over time so that when the crisis eventually happens, it will sooner or later, you are ready. That's it.